Good morning, David Bleasdale, CTEC Africa. I'm also on the next panel, but I will be quick. Question for Peter. One area which is going to be seismic for the oil industry in the next 5 years is MARPOL. The changes to the fuel oil specifications likely to happen in 2020, in my view. Do you really think Russia can destroy all its fuel oil production in the next 5 years?
Ruben, number 4, and then we'll take
I can't understand why the next panelists are trashing their own panel by overrunning on it. Okay, Ruben, come on.
I have actually 2 questions.
Oh, Ruben!
One is for
one, as long as they're short, they're fine.
very important questions. One is for my colleagues from ex-Soviet Union. How the collapse in Russian ruble affected the rates of national currencies, and in that sense, how it also affects the investment and if, in your energy sector, if it is related to the use of local currency. And question to World Economic Forum. Anatol Galetsky wrote that the former Financial Times has now in another journal, but very interesting character. He wrote that the oil companies are wasting a lot of investment because it is becoming redundant, excessive due to the change in the energy balance. How would you comment on his claim?
Okay, I'd like to invite short comments from each of the panelists to the issues raised by the questions in the same order as the speakers spoke. Peter.
Thank you. Taking David's question first. Before we started, David said he was looking forward to hearing me speak, but I think his motivation was questionable. I think he was looking forward to me falling flat on my face. I'm actually latterly been trading clean products, but my mind is still dirty. So when anybody tells me that we're going to destroy fuel oil, I get quite upset. Russia spent a great deal of money on upgrading in the last couple of years and will continue to spend more money on upgrading. They're going to reduce the amount of surplus fuel oil and replace it with surplus diesel, higher value. When you build a cat cracker, for instance, one of the fuel oil destroying machines, you build it on the basis of the differential between the gas oil price and the fuel oil price. What has been quite surprising in the last 12 months is the crack spread for gas oil has reduced, diminishing the return for building those cat crackers. I think they will continue to, with this process, there will be less fuel oil, there will be more gas oil. In terms of Ruben's question, we'll talk about those bonds and the long-term risk of investing in Russia. When you're investing in energy-related commodities like gas and oil, you're actually spending rubles but earning dollars. So you have dollars to repay your bonds. So actually the devaluation in the ruble, which has been quite marked, is positive for inward investment in Russia and will not be terribly burdensome to repay those debts because of the dollar income.
Murat.
Just speak. Okay. Yes, to Ruben's question about the Russian football.
Hold the microphone to...
Sorry, yes. It depends on the country which we are talking about, because some countries, some economies, they are not dependent too much on Russia and not dependent too much on Russian ruble exchange rate. That's why, let's say, if we are talking about Turkmenistan, there is a very small dependence. That's why we don't see any effect of that. And the main effect which we can observe is because of the low oil price, not because of the Russian ruble exchange rate. And I think the same story is about Azerbaijan, but some other countries they are much more dependent, like Kazakhstan, and we see the double effect of low oil price, and also because of their dependent or somehow interconnected a lot with Russia, we see the effect also of the natural gas in Kazakhstan. And I think the same story is in Kyrgyzstan, Uzbekistan, and Tajikistan. Because normally all these countries they were very much dependent on Russian economy and Russian supply of energy.
Malcolm.
Well, I totally agree with Murat's statement. I actually travel a lot in that region.
However, I do believe that the currency exchange fluctuation is the biggest macroeconomic challenge now for the governments of these countries. As for Georgia, our main trade partner is the EU, so we don't have as big exposure to the Russian economy as our other neighbors have, and of course we are closely monitoring all the timeline of the projects which are crossing our territory. We are happy to see that we don't see any delays. So, but on the other hand, if the prices on oil going to stay down, and if the fluctuations in the currency exchange rate will continue, of course, this may negatively affect the future projects like Kashagan, the second phase, and projects like this, but not the current ones.
Maciej.
Thanks, Matthew. So the emissions efficiency question, well, it's actually very interesting to learn. I was not aware that Iranians were taking this into one of the let's say, competitive advantages for them. You know, for example, Canadians, for them, it's a liberality to address that. The oil sands are seen as the most emitting than average. So the industry there is really working together. They even set up very recently an innovation hub that is investing, like providing financing for innovation in order to address that. I guess you are thinking more about the value chain, the whole value chain. Efficiency, they are really focusing on upstream side. But definitely it's of question, well, companies are trying to work together on that, because probably when you work together you can share the risk and then cost better. It's hard to improve on your own. Well, I think it's a great point, and definitely there is some progress, but I think a long way to go, and for the long-term viability of oil especially, very important aspect. But maybe then now waste. I think the question was in the context of stranded assets. What was it about that companies invest too much today because there is no demand in the future? This is what you meant, or you were thinking about this was what I was saying, that basically they produce too expensively?
I think you just answered the question that you...
Well, the question is what's the question? If it's about stranded assets...
I really don't want that debate to start. No, Ruben, please. We don't have time for that.
Maciej, your sentence is now going to be the final before we adjourn for lunch. I know there's a lot of other questions of interest out there. We've overrun on time. The good news is that all our speakers are going to be available at lunch, and you can interrogate them at will. So Maciej is about to make the last comments of the panel.
What I wanted to say, if it's about stranded assets, I think now is also David and others on the first panel were saying, now they should probably cover demand 5 years from now. And I guess we think about that too.
Ladies and gentlemen, thank you so much. I hope you found this panel interesting. I have, and I already knew what they were all going to say. I hope you'll join me in thanking all the speakers for a really fascinating discussion, and they're all going to be available over the lunch break for any further questions. I'm just so sorry there are many. I know there are many of you who've been desperate to ask questions and haven't had an opportunity so far. But thank you everybody for your participation and interest.
Thank you very much to Matthew and all the panellists. Thank you to Gentium Law for being sponsor of the event. I think there's a learning curve for us. I think the panel needs to be an hour and a half long. Thank you very much, everybody. We are now having the Africa panel. Thank you, colleagues. It's a great privilege to have you here. If I can invite the Africa panel to come up, and we're going to have a presentation next from the colleagues on Africa. Africa is obviously one of the most important dynamic areas of change, investment, development, attracting huge attention all over the world in terms of oil markets. I'm very pleased to have Deloitte here in the face of Chris Jones, who's heads up Deloitte's energy practice. Chris is going to introduce you to our speakers, so without further ado, so that's Freudian slip. I will invite Chris up to the panel. Are you doing it from there, Chris? Okay, thank you.
I'm being lazy now. Good afternoon, everybody. So to introduce my panel, going around from my right, next to me is Charles Timlett, Business Development Africa, AOT Oil Trading. Then Chris